FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And in this week's video guys, we're going to go ahead and we're going to talk about swing trading. And I'm going to show you what I think is probably one of the easiest ways that you can actually swing trade. Okay. So without further ado guys, let's jump right into it. Let's take a look and see how we can swing trade and what I think it's the easiest way to do so. All right. So let's go. All right, guys. So when we talk about swing trading, right, what are we talking about? We're talking about essentially trying to take a trade on a higher time frame and try to hold it as long as possible, right? Whether it be a couple of days, whether it be a couple of, let's say a week or so, week and a half, I don't know, however long we can hold it, right? So I think one of the best ways that I found that you could swing trade is basically by identifying peak formation high and peak formation low, right? So trend reversals is probably what I think it's going to be the easiest way to try to identify a trade. So just for example, these are some swing trades that I've taken since the very top here. This is pound USD. This is a swing trade still going on right now. I took the same trade on pound CAD and then pound JPY as well. All right. Also took on, what is it, Euro CAD as well. All right. So all these trades here are basically swing trades that I've taken. All right. So I think when it comes down to it, you have to be able to identify peak formation high, peak formation low, right? So that would be basically your anchor, your trend reversal that you'll be looking for to be able to enter the trade. And if you don't know what trend reversal is, or peak formation high or low, all it is essentially we're talking about if you have a trending market here. So if you have, let's say, a trending market here doing this, doing that, right? You have a trending market, and then all of a sudden you have a reversal like this, and then we start going the opposite way. Okay. So how do we determine, essentially, what's the best way that we determine this is going to happen? Okay, well, if you've followed any of my videos, you know that we try to trade with market makers here on this channel, right? So if you haven't, if you're new to the channel, you haven't actually saw any of my previous videos, if you go to the playlist, select trading with market makers, and it'll start you from the very beginning, and essentially you can get caught up with everything. All right, but essentially we know that we basically have 3 levels of rise or drop before we typically get a reversal, a trend reversal to happen, right? So it would look like, let's say if we start from the very top, we'll start like this, and then we'll have essentially a level of structure comes down, we'll have another structure happen, and then finally the last one here will make, most of the time we'll make a W. Okay, so, and then essentially we have the reversal going back up, right? So we'll have the another level here, keep going, and then it'll just keep doing that, yeah, to follow the trend. So on a higher time frame, essentially, is what you're going to have to go to. Let's say an hour chart, or even a 4-hour chart, and can you identify where you are in the market maker structure for the week, or even for if you're looking at, let's say, a 4-hour time frame, obviously then you're looking for the crosses of the EMAs. Again, all these videos that I'm talking about for EMAs and stuff like that, they're all in the playlist. So if you haven't watched them, go watch them so you know what I'm talking about. But if we can identify this peak formation high, peak formation low, then we can go ahead and actually trade the entire trend going down and the entire trend going back up. Okay, now to be able to do this, I mean, it takes practice, obviously, number one. So before you start doing this, right, go and back test it on a pair. Pick any pound pair, any whatever pair you want, don't matter. And go and back test it first, so that way it'll help you start to identify the trend reversals, which is basically a big multi-session M or a big multi-session W. So double top, double bottom on a higher time frame, like a 4-hour or an hour time frame. If you need help, essentially what you can do is you can start to use let's say the EMAs to help you, right? So if you look at, let's say, this pound USD, you're looking at basically, this is your peak formation high here, and then you start to go off into the structure, right? So your reversal obviously is a double top here or an M. Multi-session, of course, that's going to be the best type of setup. And then of course you had a crossover here of the 13 and the 50. So whenever you have a crossover of that, whenever this crosses over, price is already down here, and so this should start building out essentially the structure, the retracement for the start of the trend. Okay, so right now this entire, let's get rid of this here, this entire structure right now is basically the first level right here. So you have the trend reversal, peak formation high, you had the crossover, and now this, so this right now is working that particular level, right? So what do you expect after this? Of course you expect a drop, right? You would expect a drop, and then it starts to create another structure, another retracement basically. By that time, when this happens, the 200 and the 50 would cross, right? And then that would indicate the second structure here, the second retracement that happens. All right, so as long as it keeps following this flow, okay, you can basically keep moving the stop loss down. Okay, and you can basically follow it throughout the entire thing. Now, because this is a higher time frame, obviously this could take days, weeks, I don't know. Every one of them is different, right? So you can't, it's not a certain period of time or anything like that. So every one of these is different. But the important thing is to even try to attempt this is you need to understand how to identify the structure from the previous week, so you know essentially how many times, what level you're at basically from the reversal from the previous week, okay, or from the previous trend. Okay, so if you can identify that, then it'll make it obviously a whole lot easier for you to see this. Okay, so the pound pairs really were pretty simple because they were literally all doing very similar moves, right? So pound CAD, pound USD did very similar moves. Pound JPY, same thing, very similar moves. And also actually Euro pound as well. Sorry, I forgot about this one. So here's, the counting of it, and then you can basically start counting back up again. So this is essentially how you can do it. But again, it takes practice to do this. But if you can practice it during your back testing, obviously you'll get that much better at being able to identify it. And so you can identify this on any time frame that you want. I mean, hell, if you want to do the daily, you can do the daily. It's going to be a whole different ballgame when you look at it on daily, though, because you're looking at it on, from a different perspective. You know what I mean? So if you look at it, let's say for this, for example, on a daily, you're looking at essentially, what are you looking at here on a daily? This would be, your reversal. This would be one, right? And then you had a move coming up. You still haven't had the crossover yet. Here, these two. So that won't happen quite yet. So this is probably going to build out, and once this builds out, you'll see the crossover happen. So you can see how on a daily, it just looks a lot different than it does on a 1 hour chart, right? So it just depends on what chart you're essentially looking at to trade it on. Okay, the higher the time frame, the clearer the picture should be, but obviously the longer it takes for everything to develop, right? So it's going to take time to develop this on a daily chart when you compare it to, like, let's say a 1 hour chart. You know what I mean? So depending on what time frame you use, is going to determine essentially how fast or how slow you're going to be in. If you're doing this on a daily, I mean, you're going to be basically trying to hold this for several weeks, because each candle obviously is a full day. So it's going to take a long time for you to get into these trades. However, you can hold them for a lot longer, and God knows how long that'll take essentially to finish what it's doing. I mean, if you're looking at something like this, for example, I mean, God, this is like over 700-800 pips. You know what I mean? So that's a long time. And I mean, obviously, this is from if we look back here, you're talking August, 1st of September all the way down to October. So I mean, that's huge. Like, can you hold it that long? Do you have enough patience essentially to hold it that long? So that's why a more realistic approach really would be like a 1 hour or maybe a 4 hour chart, to do it on. So it's up to you really, whatever you feel more comfortable with. But before you start doing this, you have to get good at identifying the trend of reversals that happen, the multi-session M's, multi-session W's, so double tops and double bottoms on the higher time frame. You can use the EMAs to help you with trying to identify which retracement you're at, so what level you're at basically before you get to the trend reversal M or W at the bottom. Okay, but essentially once you get into these trades, once you see that double M here, you can see that you can still have that crossover. That crossover still happen essentially of the 5 and 13. You can still use that if you want to, even on an hour time frame. Okay. So you can still use that on a 4 hour time frame, same thing. I mean, you just be getting in like down here, But this one actually worked out pretty well, pretty almost perfect, almost too perfect, because this here was the beginning of the week. This right here was the beginning of the week, so it started the entire thing. So Monday, you had your false move go up. And then Tuesday, that's when I got in on Tuesday right here. And then, started to work its way down. So if you really want to trade this, right, and you really want to be very picky about when you get into the trade or how you get into the trade, then understand also what the weekly, cycle does on the chart. If you start off if you know that the previous week you've been trending the entire week, and on, let's say, Monday you get this peak that happens here. Tuesday you get a nice little short move here. It doesn't touch this, because if they go up and touch this, essentially they'll release other traders that are here stuck on a long, so they can go short. So that's why they don't go all the way up here. But essentially, you can see, you can take it straight down, and essentially you can trade this and hold this and not have to worry about, all these little movements here back and forth, and just continue to hold it as it continues to go. Okay. But essentially, that's what I think is going to be the most easiest potential way to have a swing trade. I'm sure there's probably 25 other ways that you can do it. This is just a simple way that I found to be able to do it. You just have to be good at understanding where you are in the trending structure of the previous week, but it's totally doable. And like I said, you can hold it here for a week, 2 weeks, however long you want to. Okay. So guys, I hope that this video has helped you out. If it does, give me a like on this video, guys, and also comment below. Let me know what other videos you'd like to see for next week. All right, guys. Thank you so much for the support. I appreciate all the comments, and you guys have a good one. Guys, one last thing. Thank you so much for watching my videos. I really appreciate the fact that you take the time to watch my videos. I really hope that I've added value in each of the videos that I make for you guys, and I hope that you're learning something.